To have you with us. You're still an owner of Airbnb, I would take it.
I'm still an owner, haven't sold a share yet. Thanks for having me on board here today.
We're delighted to have you here. The forecasts for earnings this afternoon are pretty drastic. They show losses, $7 a share, $8 a share, something depending on which forecaster you use. Are those anomalies and don't really point to a fundamental flaw in the business in your view?
I think they're complete anomalies. I think the pandemic will go down as an anomaly for Airbnb. You're going to see, probably see sales down year over year and losses for a company that was profitable for a large part of its history. So I think what you're going to see is, on the positive side, you're going to see increased bookings, increased site traffic as the world is slowly getting more back to normal. And folks are planning either car or plane trips in the back half of the year.
Car or plane trips, and maybe some of those travelers don't want to go to traditional hotels. They would rather go to a bespoke apartment on the left bank rather than stay in a big place for sanitary or health reasons. How does Airbnb really make money? Is it a cut of all the rent? What?
It's just a cut of the rent. So, the ability to be able to help either hosts find customers or customers find that nice little place on the left bank. Just by being the broker in that transaction, Airbnb takes a small percent.
And where does most of its revenue come from? Does it come from the United States or Europe? Does it come from urban rentals or vacation destination rentals? How do you sectorize the business?
Yeah, I think it comes globally, and obviously, especially before the pandemic, China was growing very quickly, but a lot of it comes from urban globally. So if you look at some of their top places, it's who do you expect? New York, London, Paris, Sao Paulo, where people want to go, and to a certain extent, it's both inside the country, so people from Philadelphia or even other parts of New York going to New York City, but it's also people who as you alluded to, corporate travel and people going on business trips in those urban centers and wanting to stay at something which might be a little bit more socially distanced.
And I wanted to ask you a little bit about the return of travel and sort of this pent-up demand. I was just looking for an Airbnb in Phoenix. You can't find one for a reasonable price. There's no good prices for a decent Airbnb. In the Catskills, no good prices for an Airbnb. So to me, it looks like the demand, that pandemic demand, still exists, much less when people start flying again. Where do you think this company could go?
I think you're going to see continued demand. You're really hitting on three of those trends, right? You're hitting on people wanting to take less far away plane trips. So going to a Phoenix over the winter instead of maybe somewhere internationally. You're seeing the driving trips of being able to go to the Catskills if you don't feel comfortable being on airplanes. Or you're seeing people who might want to, instead of working from home after a year, want to go someplace for a longer period of time and work from there. So if you think about all of those trends, which even when post-pandemic people are starting to return to work, returning to their normal lives, there's going to be more flexibility to work from Airbnbs. There's going to be more corporate travel, which is going to rotate from traditional hotels and high rises to Airbnbs. And then you're going to see rise of both plane as well as car travel. So, there's no limitations to where the company can go, and being very asset light and not actually owning any of the places gives them flexibility to scale with all this demand.
Shepard Smith here. Thanks for watching CNBC on YouTube.